Right, to talk to us about the auto sector, we're joined by Surjit Arora, auto analyst at Prabhudas Lilladher. Surjit, thanks for joining us on NDTV Profit. Now, your house, Prabhudas Lilladher, has come out with a report where you said that truck rentals have moved up 4 to 5% in May. Does this mean, can you tell us what has been, how have the truck rentals moved up, what has backed this, and is this a sign that the CV cycle has revived?
Yeah, as you rightly pointed out, truck rentals in the month of May have gone up by 4 to 5%. That basically because of three factors. One, your agri-produce till now has been quite good, and that's why your commodities, mainly vegetables and fruits, have been giving a lot of demand in terms of movement of goods from one place to another. Second thing is, whatever diesel price hike we have taken, and we have seen across last 6 to 8 months, fleet operators have been in a position to pass it on to the end consumers. So pass on diesel price hike, higher vegetables and fruits for APMC markets, and also some spending on the budget side, whether it's construction or whether it's momentum in terms of going to the budget and the election period. All that has led to trade rates being higher. However, if you look at on a year-on-year basis, this was month-on-month we saw 4 to 5% increase, but on a year-on-year basis also it has gone up by 10%. So yes, some underlying factors suggest that freight rates are going up. But going forward, we believe it will coincide with your rainy season, where you might see some tepid increase in freight rates. But yes, in terms of medium and heavy commercial vehicle, which is a truck segment, there already we had seen some 28% decline in Q3 of fiscal year 14, which came down to 20% decline. And now in the month of May, if you look at the CM data, the volume decline is only 8%. So from the absolute volume point of view also, the medium and heavy commercial vehicle truck segment has shown some size of revival. However, we believe the total positive growth will come only in the second half, because now you will coincide with the rainy season, which is a kind of a tepid period for medium and heavy commercial vehicle sales. So from that angle, next 3-4 months will be tepid, but going forward, let's say from September, October onwards, I see some positive growth happening, though not in a meaningful manner. It will be hardly 4-5% kind of a growth, but definitely CV cycle has bottomed out in my view.
Right. But when it comes to light commercial vehicles, there was again a drop of about 20% in May. And is there a change in preference for the multi-axle trailers? Who makes these multi-axle trailers? Is there a change in a preference? Who will benefit if there is one?
Yes, as you rightly pointed out, if you look at multi-axle trailers, basically when the decline happened 3 years on a trot for MHCV segment, this was a segment that is 40 to 49 ton, which saw a huge dip in the volumes. Now when the recovery is happening, it is the other way around. When recovery happens, this segment, which has been down by 50-60%, is recovering faster compared to other segments. And if you look at the CV manufacturers, or let's say the fleet operators, many of the contractors are telling them to improve their fleet age. I mean, for example, if they have 8 to 10 year old kind of a tipper or a tractor trailer, they have been told to replace that, because unless until they have new CVs with them, they will not back that 3 to 4 years order from their contractors. So in terms of visibility of their orders and also visibility of their overall revenues, they are compelled by the contractors, where they go for 3 to 4 year contracts to get into new CVs and hence kick in the replacement demand. So continuously going forward, if CV cycle recovers in second half of next year, I believe this tractor trailer, which is a 40 to 49 ton segment, should see some growth, better growth compared to the overall industry, and it will grow faster compared to the underlying medium heavy commercial vehicle growth.
Right.
And on LCV side, if you look at Tata Ace has done pretty well for last 5 years, but now with the high base catching up and medium and heavy commercial vehicle also doing bad in last 3 years, that is percolating down to LCV. So it's a matter of time that once MHCV starts recovering with a lag effect of 1 quarter or so, LCV should do well. I think Ashok Leyland and Tata both are pretty much there in the tipper segment and the tractor trailer segment. So whenever the recovery comes, these two players specifically would benefit the most. Having said that, new players like Bharat-Benz, Volvo, Eicher, all are also planning high-end vehicles. So as the industry, all will start gaining with trailer segment looking up going forward.
Right, and in your report you've also spoken about truck owners which appear to be right now gearing up for fleet replacement. So how much, what kind of an, what is expected? Like we all are hearing that the infrastructure projects are expected to get clearances, and a big boost for this particular sector is also expected. When do you see that thing actually taking place in the auto industry?
See, if you look at last 2 to 3 years when there was a decline in MHCV, the fleet operators this time were very cautious. They were not adding fleet just for the sake of it. So now they have been quite smart, and they were utilizing their existing fleet. So currently, if you ask me, though we don't put any utilization number, but ideally currently with the existing fleet being utilized, the utilization could be around 75–80%. So in anticipation that government will do a lot of things on the ground level in terms of reforms, in terms of reviving the infrastructure and the road projects kind of proposals. Once that comes in, they have to plan in advance for taking care of this kind of demand for heavy duty vehicles. So yes, they also know, they are also hopeful that in next 6 to 8 months things will change on the ground level, and hence not in a meaningful way, but they are at least looking at replacing the CV. So yes, to answer your question, in next 6 to 8 months,
right,
you might see some replacement of CVs also happening on the ground level.
Right. So in the next 6 to 8 months, some replacement is expected. But now, budget is something that we all are looking forward to. What are your key expectations? What do you expect for the auto industry?
See, as an auto analyst and as a representative of auto industry, the basic big positive for us will be no rollback of excise duty cut. I mean, whatever cut was done in the recent interim budget, if the the new government keeps status quo on that particular thing with excise at around 8%, I think that itself will be taken as a positive by the industry per se. So no trinkling of excise duty reduction, which already happened in the interim budget, will come as a big positive for the industry.
We leave it at that. Surjit Arora, many thanks for joining us here on NDTV Profit. So clearly, the auto industry is certainly expecting no rollback of the excise duty cut, at least in this particular budget. On this note, we'll slip into a very short break with lots lined up. Stay with us.